Hello, it's Wednesday the 8th. I'm FxPlew and this is the market brief. So the Bank of England has been on. Their latest forecasts suggest that the recession will last 2 years until the middle of 2024, when the economy will be about 10% smaller. That's based on the idea that interest rates will reach 5.25%. Morning. Chief Economist Hugh Pill has been on. In a speech yesterday, he said that the MPC has not yet considered when they will start to taper the current programme of rate hikes. And indeed, there has been no real suggestion that they will stop or even slow the pace of current rate hikes just because the interest rates have now reached 3%. Ahead of CPI inflation data next week, we had a slightly more niche inflation data set out yesterday. That showed that grocery inflation rose by 14.7% in October when compared to last year. That's the highest on record and translates to about a £700 additional cost. This all helps add to suggestion that inflation has much further to go. Indeed, the current estimates put the peak at around 18 to 20%. And against that backdrop, sterling continues to climb away from the 112 support level against the dollar. We topped out a couple of pips shy of 116 against the dollar yesterday. We opened this morning around 114.65 against the euro, and euro dollar is around 100.65 on the open. Over in the US, the midterm polls have closed and the results are trickling in. Last I checked, the Senate split was 46 to 47 to the Republicans. They had lost one seat though, and the Democrats had gained one so far. 51 is the magic number there. That delivers the Senate majority. And the outcome will affect Biden's ability to pass measures that he believes may help avoid a recession going forwards. But away from the election, there is, of course, the ongoing question of whether the Fed should calm down with all the rate hikes. Higher rates affect the overseas cost for dollar borrowers, which some feel may hamper the wider global recovery. Powell often says that he's in regular contact with other central bank heads, though, and he feels that the Fed fight against inflation should also help the wider global economic recovery. Added to that, strong payrolls data seems to have pushed back any thought of a slowdown in the Fed approach. While the economy is adding more than 250,000 new jobs every month, it's unlikely that the Fed will start tapering rate hikes just yet. While the election result still carries a degree of uncertainty, the dollar index has been continuing to correct. That fell to, I think, 109.40 on the day yesterday. May have a little further to go today. Right, that's it from me. Have a great day.
If you do not have a clue, then just tweet through and ask FxPlew.